Welcome to Question Time. There are headlines flying all over news organizations today. I'm pretty sure what the question's going to be, but I'm not going to steal Steve Brennan's thunder. Steve?
We've got Nvidia in the headlines. Uh, Company came out, pretty much beat expectations, numbers, or at least what analyst consensus was across the board, and the stock falls. So, Joe, I was hoping you could kind of explain how a company can have what seems to be a great quarter and it gets sold.
Well, first of all, there are what are known as the expectations that everybody knows about, and then there are the whisper numbers. The whisper numbers. Everybody talks about this, and I don't know. I don't think anybody knows what the hell it means. Who the hell's doing the whispering? And who are they whispering to? There's this concept on Wall Street about, some people think it's going to be even more. So the whisper number. Yeah, it's mysterious. I don't know, man. I guess there were some expectations that were not met, and those people sold. I don't know. I think that it's interesting when you think about how stock returns get generated, right? So what do we have going on today? Nvidia's down a little bit. It's down, $3 or something like that. It's not that big a deal. And by the way, actually, we could talk about that too. It was interesting yesterday afternoon. The market sold off pretty hard yesterday afternoon. At one point, the S&P was down 50 points, maybe over 50 points. And I think that was primarily driven. There was no news. I think it was primarily driven by fear of this Nvidia earnings report. People talked about this earnings report like it was the most important thing to the market, just more important than an employment report. It was just, this is what everybody was focused on. So I kind of knew, I suspected anyway, when the market sold off yesterday afternoon, I thought, well, that's fear of Nvidia. So if everybody's afraid of it, it's probably not going to be that big a deal. And indeed, we've gotten back everything that we lost yesterday, plus a little bit this morning, because it wasn't that big a deal. The market's, Nvidia's down a few bucks. After a huge run like that, I don't suppose that's all that big a deal. And by the way, I think people, have this idea in their head that Nvidia's had this big run. But, Nvidia peaked. Let me make sure I get this right, because it is interesting the way people perceive things versus how they really are. So if we go back and look at Nvidia, the stock price actually peaked in June. Looks like June 18th or 19th, somewhere around there, at 140.76. And that's post split. It's now at 121. And it didn't make a new high. We had this correction in June and July. The stock fell down, and it hasn't recovered to the high. So, it's not like Nvidia was screaming higher at the time and suddenly, earnings didn't meet expectations. It's done. No, the stock peaked a while ago. And by the way, I tend to think actually that a lot of the hype about AI itself peaked in the spring and early summer. We'll see how that plays out. But look, Nvidia had a great quarter. It's a great company. They've had extraordinary results, 50% margins. I don't know how you're supposed to do better than that. Well, actually, they had done better than that. That's down a little bit. I think they were 52 last quarter. But a great quarter. So look, how do you get earnings, or how do you get the return from a stock? A return from a stock. John Bogle, many years ago, wrote a paper called Occam's Razor. Let me think here. Occam's Razor: Creating realistic expectations about returns. Something like that. Anyway, it was written, I think, in the early 2000s, around 2001, 2002, and it was updated again, I think, around 2015, 2016, something like that. And here's what he said. He said, your return on the stock market, and it's true of a stock too, is equivalent to the starting dividend yield plus earnings growth. Now, and then there's one other factor. So if you think about that, I don't know what Nvidia's dividend yield is. My suspicion is 0. Let's see. Does it pay a dividend? That's a big one. It pays a penny. So your first thing is that the dividend yield on Nvidia is squat. So you're not getting anything from dividends. So everything is dependent on earnings growth. So that means that these earnings reports become very, very important, because that's where your future return on Nvidia is coming from. What was the other piece, though? What was the other piece that John Bogle talked about when he was talking about, and he was talking about the market as a whole, but again, it applies to a stock. What he talked about was the speculative return. He called that first part, the dividend plus the earnings growth, the enterprise return. That's how the business did. That's what created that return, was how the business did. And then he had another piece that he called speculative return. And speculative return had to do with how much were people willing to pay for those earnings. So that's about the multiple. It's about the price to earnings ratio or the price to sales ratio. It's about fundamentals, and it's about the enthusiasm for the stock. It's about emotion. And so when you add those things together, you got this huge earnings growth at Nvidia, which says, yeah, you can justify this big run up in the stock to some degree. And then you've got the speculative return. So what's happening today? What's changing today is the speculative return. That's all. People are putting a little bit lower multiple on it. Why? Well, maybe the earnings growth isn't quite as fast. They're talking about, if you look at the earnings call and you look at their expectations going forward, there's maybe a little bit of delay on the next chip. Little things like that came out in the conference call affects how people view that future earnings growth and how much they're willing to pay for it. How speculative is that future earnings growth? Is it really, really a sure thing, or is it a little more speculative? Is it a little more iffy? And I think it became a little bit more iffy yesterday. So look, that's all it is. It's just one earnings report. It doesn't mean anything. Nvidia is doing great. We don't really own the stock. We have tiny amounts of the stock because we own indexes that own the stock, but we don't own the stock directly, which I suppose everybody could say is a huge mistake, whatever you want to call it. But I can't own everything. But anyway, my point is, I don't think that what happened yesterday with the earnings report really means all that much. And I think the stock is doing what it's doing, and that future return on the stock is going to depend entirely on that earnings growth figure and what people are willing to pay for it. Maybe some people, today are saying I don't want to pay as much for it. That's all. So I don't know. We'll see how it proceeds from here. But like I said too, I think most important too is that the stock is not at the all-time high. It's actually already sold off. It already peaked. So everybody's looking in the rearview mirror. And I don't know I don't know that there's a whole lot more upside in this thing unless earnings growth is going to accelerate again. So we'll see what happens.
Joe's a great teacher. So if there's something you'd like explained, put it in the comment section down below.